All right, welcome everyone to the Bitcoin Weather Report. Tone Vase here filling in for Matt McGregor. It was supposed to be the other way. I was supposed to be on a flight, and Matt was supposed to do the show, and then, things happen. And Socrates, welcome back. Last time I saw you, it was in person. I am here in Miami. We are with Satoshi the dog and awesome Bitcoin gong in the background. How are you, man?
I'm doing great. It's good to see you. Yes, we had quite a good time when you were in town the last time that I saw you, and we've had some nice price action since.
Yeah, we did. And I got to give you credit, man. When we did that show, you were very, very confident that we were going to pull back down to approximately 60 or even lower, but 60 was your bottom end target. It was also my bottom end target, but because of the way the MRI was playing out, I was hoping to see slightly lower prices as low as 58 because it would have lined up with my MRI buy. I can't wait to look at your charts. I'm going to do my screen share real quick. I'm going to do a quick summary, and then the show is going to be mostly you, Socrates. So here we are on my charts. Here's the weekly chart. We are in a positive MRI count on the weekly, but we need a new candle breaking the prior candle's high to get a green star candle. And I love getting my green star candles on candle number two because that leaves lots of room for upside. When it's not on candle number two, I like seeing them on candle number three because it still leaves plenty of room for the upside. But in order for us to get a green star candle on weekly number three, we would need to go above last week's candle, which means the price of Bitcoin needs to be above $66,000. And if we get above $66,000, that makes this week's price action a little overextended. So I'm once again having a little bit of a dilemma on a clean trade with a green star candle, kind of similar to what happened last time we got a green star candle. Look at the massive first candle with a massive candle prior to that. And by the time we got the green star candle, the price action was exhausted and we were sitting at resistance. Um, and if we get a green star candle on the next candle by breaking this candle's high, it's still okay. But now we're 2 weeks behind as to for how long we can go up. I mean, this is one of the general issues with TA is that it's not always perfect, but when it is perfect and it's your TA and you trust your TA because it's your system, that's when you kind of go all in because it's your system that you trust. Therefore, so how do I sum all that up? I am pretty bullish, but my TA is not giving me a proper entry yet. Now, I've been discussing the 4-day Consensio chart with Mark. I took your words seriously, Socrates, about the 4-day chart not being an ideal candle structure for Consensio, but I'm really liking what's happening here. This is a brand new candle now, and as long as the next candle starts breaking that 66K, all the moving averages line up and even the long-term moving average will start to trend upwards on the following candle. So this sets me up very, very nicely for 100% long position starting next candle, unless current candle starts to run away and starts breaking probably 67,000 on current candle or breaking 65,000 on the next 4-day candle. Either way, this is looking very, very good. We had a beautiful pullback based on the daily scale. I really wanted to see us go to 58,000. It would have given me the most perfect buy-in opportunity. It did not. Gave us a green star candle on candle number two off of consolidation, which is how I would love to see the weekly structure happen. But once this daily candle gave us a green star candle and now closed as a green star candle on yesterday's candle, which was Sunday's candle, everything is looking absolutely great. We are all set to go for an MRI top using daily candles. This is a way cleaner green star candle than the last green star candle we had. We had a nice, and even cleaner than the one before that. So we are on pace for a green star candle, very similar to what we saw back on September 12th. I am pretty bullish here, and I don't think we're gonna fly all the way up. I still kind of have this declining trend line that I think will still bounce the price back and forth. I'm not expecting any critical breakouts towards new all-time highs until the very end of October, maybe even November, but I do expect us to get out of November above 65,000. I'm going to go ahead and leave it here. I don't really, yeah, I don't want to talk about shorter term time frames. I will leave it up to Socrates. You're the 4-hour candle expert here. So unless you have questions about my chart, Saw, I'm going to hand off screen share to you.
No, that's sounds good. Maybe we'll have some questions after, or just ask for some feedback after sharing my analysis. I'm very interested in when we last did a stream. I think it was it was probably 2 streams ago, when you said to just kind of that we could just do nothing for the next couple of months, and that you're just waiting for October for some movement to happen, and that was based on not necessarily just crypto, but more so the timing of the seasons when markets really like to move. So I'm quite interested in you thinking that it probably won't be ready to make new all-time highs this month, despite this being the month that you were kind of waiting for. You care to elaborate on that at all?
Sure. So I've been saying since probably July, time is in our favor, and we need to just wait until October. And the reason is because in my, wow, 20-year trading experience now, I find that the stock market finds a low in the price either in September or in October. That is a 60-day span. Now, that doesn't really help you in shorter term trades, but it helps you with, longer term setups. And of course, now you need to determine if the low made on September 5th is going to be the low for that 60-day period, or is there going to be another low coming in October 25th? This is in general speculative markets, whether this is the stock market or Bitcoin. So as I look at the daily chart, the crazy low on the swing low came in early August, but the closing low on the daily Bitcoin chart came in September 6th. Okay. So I don't like double bottoms. So I always kept the possibility open that October could set a lower low. But as October comes to an end, um, the probability of a new low going lower than the September 6th low, which at the close was 54,000, the probability of that decreases, especially as the price of Bitcoin is further and further to the upside away from the $54,000 low. And I always expected before the month of October ends, we're going to be in a full-blown bullish trend, and the low is going to be behind us. As we are now approaching the second week of October, and we are, in the mid $60,000 range, the probability of us going lower than 54,000 is significantly diminished because, again, there's only 3 weeks to go. And the low that we got on October 2nd at just under 60,000 or right at 60,000 is also the probability of that low being that secondary low is increasing with every single day. So my view is by the time October ends, we should be above September swing highs, which were at 66,000. So I am expecting Bitcoin to close above 66,000 by the end of October, and then the bull market begins. This is what I've been basically saying since early to midsummer, without obviously the specifics of where the price of Bitcoin is going to be during September and October. But as far as highs versus lows and the percentages of high versus low, it's playing out exactly as I expected. But obviously, I didn't know if it was going to be in the 50s, the 40s, the 60s, or the 70s.
Very interesting. Yeah, I think it's so important to, it's so easy to put price before time. And when you are putting time before price, it can really help to avoid the headaches of some gross chop or unexpected direction. So really have been thinking about the way that you've been waiting for October specifically, because that's kind of the first I've heard about that low coming in September or October. So I definitely think that that low is in, and that we are ready. That the bull trend has already started, in my opinion. So we'll go ahead and take a look
Yeah,
at.
just one more quick addition. Those of you that want to see more specifics on this, check out the last show I did with Mark Wood. We went back 20 years and looked at every October, and the only two times this idea failed was the 2000 financial crash with the dot-com. That was the only September, October that did not mark a low. And the second time it failed in the last 20 years was the 2008 crash. So we went all the way back to the year 2000. That's actually 24 years of history. And the only 2 years where this idea of October kicking off a bull market or it never pulling back at all. So obviously that's fine, right? We're not saying you should invest in a downside. So either September, October never pulled back at all, and we continued with the bull market, or September, October did pull back, and a low was created in September or October. That worked out every year in the last 25 years, except the year 2000 and except the year 2008.
That is fascinating. That is really, really interesting. And yeah, based on the current environment, that is something very much to keep in mind, that if this market does turn around, that the precedence has been set of what could follow. So I think that, yeah, this month will be
right. And we're definitely right. And we're definitely not going into this October in an environment similar to the year 2000 or 2008.
Nope, definitely much different troubles, different environment for sure. But yeah, yeah, there could be some trouble around the corner with everything going on. So definitely something to not get over convinced that that the low is already in, when the market could definitely turn around in the blink of an eye. So yeah, let's go ahead.
While that is true, while I agree with you, that is true. It is. It almost never happens. I mean, there's nothing like anything can happen in the stock market, obviously, but statistically, September, October periods, they don't kick off horrible crashes. They tend to end. This is when capitulation happens, not the beginning, right? So when I say that, yes, like even the 1929 big crash took place in October, but that's not when the all-time high was, right? So we're already on a decline. Most declines begin they begin early in the year, and then they tend to capitulate in September, October. So the probability that the stock market is at an all-time high in September, October, and then shit hits the fan almost never happens. So this is the other thing that people tend to confuse. They look at these massive crashes that take place historically in the last 100 years, and these crashes happen in September, October, but the declines begin 3 to 4 months before that. And that's when the market really drops out on those that don't pay attention, that the market is already in a decline. So this is why I am not expecting any catastrophes later this year, though this presidential election is a little more dicey than probably every prior election in history.
Yeah, that's what I was thinking about, is the election. What can happen surrounding it? But that's yeah, critical clarification that the downtrend should have already started if October is going to be a capitulatory month. We're definitely in a bullish environment with a correction that has already seemed to come to an end. So that's much different than having been in a bear market for the whole year coming into this current month. Yeah, I'll go ahead and dive into my charts. One thing I've been wanting to share that I has slipped my mind the last couple of times is something that I've worked on the last year or so that I'm really happy about. Basically, all of my charts that I'm looking at on my computer every day are available to everyone for free on the website alphaanalysis.io. If you just come scroll over charts, then you can see all of the charts that I'm looking at on my computer screen in real time, and you can see all the annotations that I make, which is, I think, is really cool. Something that I'm really happy to share. So if you click on EMA and EXA, you'll see this chart pop up with the weekly and the daily time frames with some annotations all around. So I'll go ahead and just basically walk through those so that you know what the annotations mean and what exactly I'm looking at. Last week, these last 3-4 days have just been very critical and beautiful price action that really, again, I think was a very critical crossroads as we corrected down to 60,000. There were a few reasons why I was very confident in looking for that correction, and also a few reasons why I really wanted to see it hold. So first of all, we look at this, the last red candle occurred on the last week of August, first week of September, closed on Monday the 2nd. And if the bulls are taken over, that's the area that I really want to see hold as support. So when we last week saw this correction, was really looking at that to be a critical area of support if the bulls are taking over and the tides are really shifting to the upside. And there's confirmation from the oscillators. First of all, we see the RSI has broken out through this trend line. This is a very important leading indicator for me for threshold breakouts. We see that price is still below this trend line, but the RSI has broken out and kind of supported on a retest, which is indication that it's not just kind of a little peak above trap kind of fake out. It's been above this trend line for now. This is our fourth candle that it's gone through that. So this is telling me that we are ready to break out of this downtrend environment, and I am really seeing no reason why we shouldn't be creating new all-time highs this month. This RSI is a very important indicator, as well as this EXA. Tone made me remember why it was named that, and it's EMA exhaustion. It's basically looking at how long moving averages have stayed crossed over and how is price above or below like the 9 moving average. So this is was a buy signal for me when we had this crossing over in negative numbers with the RSI breaking out. Was basically back in here saying that, okay, it's time to buy. And now I will look at this as kind of very similar to how Tone looks at the MRI when he's looking at the first like 2, 3, 4 candles as kind of being the time to buy. And then maybe like the 9th, 8th, 9th, 10th being the kind of time to sell. This is when this is crossed over bullish and in negative numbers. That's when it's kind of the beginning of a trend. Once it breaks through into positive numbers, that's when it's the time to enter has kind of left, and it's now time to start looking for profit taking. So that would be maybe 4 or 5 weeks from now. And yeah, getting a red candle with this maintaining its bullish crossover, that's where I'm looking at it as like a dip to buy. So I'm really happy with this reaction that we've seen. Let's go ahead and take a look at the daily here, which is very much in confluence. So when Tone and I did our last stream, it would have been right in here. And the reason why I was so confident in a pullback and very much waiting for a pullback is this EXA had been in extreme levels, not just normal sort of overbought zone, but actually extreme. So we look at +2 and -2 as being like the 2 standard deviation zone, where 80% of moves are going to occur kind of like this, where you're inside +2 and -2. When it gets up to +3, that's like a 3.5 standard deviation move, which only happens maybe 3% of the time, like 1 to 3% of the time. Are you able to do that? So that tells me kind of two things. One, it's like a really big signal of strength. The fact that the bulls were able to, they had enough strength to make a move that only happens maybe 1% to 3% of the time to the upside. That's a big signal that the tides are shifting. Because right here, this is where all the bears would come in and be selling, looking for it to fall back down, and they got blown out when price supported 58,000 here on the 16th and continued all the way up to 65. That's what caused this EXA to move all the way up into like +3 territory. So that's when it's like, in my mind, I'm thinking of like a red line, like a car that's redlining. It's like, yeah, it's moving and it's moving fast, but it just needs time to kind of cool down and maybe downshift before accelerating again. So here was just waiting for this thing to come down into negative numbers and then to get a bullish cross, which is what we got just yesterday. And it occurred off of this level of support that we were looking at. These last 3 red candles were prior resistance that you could draw it all the way over here, but was really wanting to see this area hold as support. And me and Tone basically had the exact same sort of levels in that I didn't need 60K to hold necessarily, but I really needed 58,260 to hold. Otherwise, it's just back into a choppish, bearish, lower high structure. So this was really important for me to see price finding this support and then getting this EXA cross here on yesterday's close. That's the that's what I was waiting for this thing to really be ready to accelerate. And now the Coates moving averages here are that's the buy zone, and it's also the entry window that is closing. So when this 9 LSM crosses below the 2 low MA, that's the first kind of signal for me to buy, and it has to be confirmed by a fresh cross in the EXA. And then the last opportunity to buy is when this LSM crosses back above the 2 low MA. So that's why I have this little eyeball here kind of indicating that today's basically the window is closing. Like if we look back to here, we see once this crossed back above, that's the entry window is closed, and you should have already been kind of positioned. So that the daily and the weekly are both lining up here for me in strong confluence, saying that this last week was kind of, it's been the time to buy, and now it's the time to really move. And one final thing on that time frame, both these time frames, is this RSI is now entering into bullish territory. When it is really in a bull trend, the RSI should be supporting 50 and kind of staying stuck between 50 and maybe 80. That is strong confirmation that the trend is bullish. So again, confluence lining up with the EXA cross there, the retest of 50, and the cross in the CMA. So let's go ahead and take a look at the 4-hour MSR. So MSR is an indicator that is, it's not available for free. It is a paid indicator that you can get a 3-month free trial for by using the code Financial Summit. But if you're just into Bitcoin and that's all that you care about, you can get the charts for free on the website there just by going to the 4-hour chart MSR. Bitcoin is always available for free on my preferred time frames, 4-hour and 1-hour. So this was the last time that we did a stream, was literally my long signal. That was my signal to enter fully long. Was waking up the day after my birthday and not even realizing that this had happened when we did a stream. Luckily, it didn't leave me behind, so I was able to enter basically right after we ended. And now I am really looking for price to maintain. This is the line in the sand. It's called the marker. That is what should be support if this trend is really ready to move and move up. If we fail to turn that into support and we turn it into resistance, it's a sign that maybe we ended up getting a bad signal and getting trapped on the wrong side, because this is the kind of the horizontal that occurs when the signal happens. So if we're not moving up after the signal, it will be indicated by us being below that horizontal. So that's a kind of the last line in the sand that I really want to see us move through. The really good sign that we have here is that price resisted the death cross in the moving averages. When we got the correction, we came down, tested the 200 EMA, kind of worked below it, spent time below it, but not enough for this 50 to cross. We got squeezed right in between it, and now we moved up. That's a really good indication when you see the moving averages come together in consensio. When they come together and get really close, that's where the term consensio come from, agreeance. You want them to come together and then start expanding again. That's your signal that you've had a correction. You've supported the crossover. Everything is now moving back up. We see the 50 rolled over and started moving down, and now it's just started to move back up. So that's really, really bullish and exactly what we want to see. Go ahead and take a look at the 1-hour, which is also in a really good position. Once it loads up here, it should. Oh, looks like there's a issue with that. Shoot. Let me see here. I'll just change this time frame real quick. Okay. We'll have to keep that figured out. Sometimes I have some issues with those charts. Okay, so here was my first signal where I went 50% long, was when the 1-hour MSR signal bullish right in here on September 19th. Then 100% long when the 4-hour signal bullish as well. So right here, we had a really, really good signal, and one that had me sweating, really sweating. When we made this correction into the ocean, price was right on the verge of negating the bull trend. If this 50 EMA would have crossed down below this marker and into the ocean, it would have signaled a no trade zone, which would have told me to now exit 50% of my long, which would have been basically break even, but kind of like maybe just a very small loss, but around break even. So as this 50 was approaching the ocean, it basically put a shot clock on price that it had to move like within 24 hours. Once we were on Thursday, after Thursday's close, this thing was moving down and rapidly approaching the ocean, and that created a sky squeeze, which is one of my best signals, that one of my most reliable signals that I have grown to really trust more than anything. When the sky approaches the beach and gets really close, it's a sky squeeze that calls for price to return to the 200 EMA. And it has to do so, again, before that 50 crosses into the ocean. That completely negates the setup. So it right in here, in my weather report that I do on X, I post every day. I was writing here saying, like, look, we have to move tomorrow on Friday. Otherwise, everything is falling apart. And we've seen that happen before in this downtrend. And it's something that would really have changed my entire outlook on the month if we had failed to support this 1 hour bull trend on MSR. And we were able to get a move, but it was kind of lackluster. I wasn't really thrilled by this because it failed to even test the 200. There was a front run there. The bears jumped in and sold it to the point where it wasn't even able to test the 200. So I was really still sweating until Sunday. We got a pretty unexpected move for a weekend to really get a nice rally that has now crossed the EMAs back over. So now we have checked all the boxes where we broke through the 200 EMA, tested the sky.
So you mind zooming in on the vertical axis a bit? Well, sort of, right? In general, so that not exactly what I meant, but if you go back to, if you would make it visible more in time, but now you just put your cursor on the price and you just like expand that a bit. Yeah, like that. So this way people can better see the price action and then move the middle of the chart into the middle. Right, something like that, yeah.
Okay. So yeah, now we have just checked all the boxes where we broke through. And then we got the throwback and into the Golden Cross just this morning to open the week, which is very important. The first sort of move of the week should be counter to the trend. If you think about a like a weekly candle structure, oh, there it goes again. If there's going to be a wick below the price, it has to happen early in the week. If you have a green candle, it's like 95% of them are not going to have just a complete flat bottom. They're going to have a wick. That wick would have to happen early in the week for this thing to then close green with a wick below. And that's kind of the best buying opportunity is going to happen generally very early in the week. And that's what I'm seeing here is that we got a really nice correction throw back and into this Golden Cross to open the week right on round tones sort of turning time this morning, kind of when New York opens and Wall Street starts trading. That's when you want to see a low occur or a low or a high, depending. If it's a high, it indicates that maybe a red week is coming. If we get a low early in the week on Monday morning when New York is opening up shop, that's a really great recipe for a green week. And if we extrapolate that to a higher time frame with the monthly, the meme has been UPtober, and that's something that I believe in. I think October is going up in a big way, and for it to do that, it needs to open down. So the fact that we had a really nice move down to open the month is a really bullish indicator for me. So we got the move down to open the month. We got the move down to open the week. Let's send it higher. I got nothing else to wait for. One other thing that I want to point out that has been completely unprecedented, something I have never seen before, that is probably the most bullish indicator for me, is coming from the FOMO finder, which is for me that fear greed index on Bitcoin is just complete garbage. It just doesn't work at all. I don't know anybody who actually uses it to execute anything. It's just a meme, basically. But the FOMO finder is something that I've put a lot of weight into because it's based on funding rates and futures premium. It combines the two to tell us if we are in a state of FOMO or panic or potentially capitulation. Think if we have backwardation plus negative funding, boom, you're going to see capitulation. That's going to be a really important indicator. If we have a discount in the futures premium, if it's discounted from normal, and we have discounted funding, that's going to give us uncertainty and maybe even panic. And that's what we've been seeing for the last, let's see here, for the last like month or so. Unfortunately, the I'm gonna have trouble. Okay, so over this last month, I just zoomed into September 16th through October. We've been getting these panic readings after price moves up, which is just insane. It's completely unprecedented. We've seen price go, let's see here, 1 second. Yeah, screw up all my charts, but I'll get them back. So over that time period from September, we've seen price move from 53,000 up to 65,000. When it moved from 54 up to 60, we got panic readings. So it just moved up 10, 15%. And we've got negative funding persistently for days, negative funding plus discounted futures premium. We saw the futures go all the way to par, where you had October, November trading with a 0% premium, which isn't quite backwardation, but it's close. And it's crazy for that to happen after price goes up. You only really ever see a discount in futures premium and negative funding after a big move down. To see that, it tells me there's only really one read, is that the bears are overselling this bounce and they are doubling down after price moves against them. So I'm seeing bears in a position where they are trapped, and they are they've just continued to double down, and that's the only reason. That's the only way we could see negative funding after a 15% move up in price. It's completely unprecedented and really a sign of a big turn in the trend. If we think about backwardation, capitulation, that signals a big bottom, a big reversal point. When we see something like that during this move up, I get the same read, that it's really a shifting of the tides, and that that's something that one of the main reasons why I am so bullish right now is based on what we've seen from the futures premium and the funding rates during this move up. So that's all I got. I don't want to stop sharing my screen, I don't think, but I don't have really anything else to share.
So let me ask you this question, more of the big picture thing, right? So in my view, when a big exchange goes down, like the last big, catastrophe was, say, FTX, right? And suddenly thousands of people, tens of thousands of people realize they don't have the Bitcoin they thought they had. And to me, these are like the initial reaction is panic, because holy shit, Bitcoin's been hacked, Bitcoin's dead. So the initial reaction is to massively sell the Bitcoin. But then all these people that thought they had Bitcoin that now don't have Bitcoin, unless they're completely broke, they go into panic mode. I mean, they know Bitcoin's not dead, and they now have to buy the Bitcoin, while the Bitcoin they thought they had may or may not exist somewhere. And if it does exist somewhere, obviously the scammers of that Bitcoin can't massively start selling it because it's easier for them to get caught. And a lot of that Bitcoin ends up in litigation with lawyers, and it takes years to get it back. On the flip side, so to me, realization that you don't have the Bitcoin is bullish for the price of Bitcoin on a 1 to 2 month delay. On the flip side, the opposite is also true. This whole FTX thing, just like with Mt. Gox, right? I keep saying eventually people will get their Mt. Gox coins, but not the people, their ancestors will, right? Like the Mt. Gox trustee is waiting for all the Mt. Gox recipients to die of old age before giving back the money. As far as I know, that is still true. I don't know anyone that's actually got it, even though there are claims that they did. the FTX is supposedly going to be handed out soon, but just like with Mt. Gox, I'll believe it when I see it. So is it possible, like, what do you think of that? Are you paying attention to these Mt. Gox redistributions, to the FTX redistributions? And when that Bitcoin comes back to people, after lawyers get their cut, but the lawyers will be selling this thing, right? Are you expecting a bit of selling? Because I'm hearing rumors that the FTX payouts are going to be imminent, but I heard that about Mt. Gox, you know, at least 8 years ago.
Yeah, great question. I think to me, it literally all comes down to the trend and the environment that we're in. If we're in a bull market and a bull trend, bearish news is a buying opportunity. If this market is moving to the upside and it really is in a bull trend, and all these coins get distributed and a bunch of selling pressure hits the market, it's going to be the best buying opportunity that we'll see the whole bull trend. If we are not in a bull market and we are still kind of in a downward trend, and the prevailing winds are to the downside, how I think of it is in bull markets, bad news is buying opportunities, and so is good news. In bear markets, bad news is selling opportunities, and so is bad news, and so is good news. So it comes down to the trend, and I think that there's a lot to also be said about when Mt. Gox went down. When FTX went down, we were at the lows, and I think a lot of people were sitting in a decent amount of their clients were in cash. I think that there's a lot of cash that will also be redistributed, and I think that there will be potentially net buying pressure from people that are that have had 50,000 in USDT locked up that they were planning on dollar cost averaging in, or they maybe managed to sell a little higher and they were waiting to buy back in lower. So yeah, I think if we're holding bullish structure and it comes out that these coins are being redistributed and Twitter's freaking out about the sell pressure that will stem from it, I think it'll be a tremendous buying opportunity, but only if we are in a bull trend.
Gotcha. All right. Do you want to pull up your weekly chart or monthly chart? What do you see for the rest of the year and let's say Q1, Q2 of next year?
Okay. Yeah, let's take a look. Let me just, I think this won't be the best way to do it. Okay. Go ahead. The monthly still leaves a little bit to be desired. Perhaps one of the best kind of long-term trend indicators for me is this EXA on the monthly chart. It is uncanny how well it's able to call turning points, and often it does it in a way where I can't even hardly believe it. Like here, for example, I wasn't believing this. But if we look at kind of these major multi-year kind of swing position moves, we got this beautiful sort of trend here that was able to basically cross and stay crossed all the way down through the lows right here. Then it again, I didn't believe this one. Looking back at it, it gives me more and more confidence in this indicator, but due to the proximity of the halving, I was not buying this, and I was kind of thinking we were going to get a immediate little recross, but I again should have been looking for this because we were so overbought. We were up here and got this cross right at the highs, and now it's been moving down and holding.
Sorry. You mind being like when you describe it, you mind mentioning months and prices, because I know there are some visually impaired people that watch us.
Oh yeah, for sure. So this crossed on the close of April 1st. The halving was like I think the 20th of April, something like that. So 3 weeks before the halving, we had this EXA cross bearish up here of well above 2. And it has maintained that bearish cross ever since. So it was just a perfect buy the hype, sell the news, going into the halving. And now it's kind of buy the dip territory after selling the news. But this is the kind of the last thing that's in the back of my mind is this thing really needs to cross over. Waiting for that to cross is too late for me. Like I'm not waiting for that to enter, as I've already outlined every reason why I'm already positioned, but this is like really the confirmation that I need to say that we are ready for another 12-month parabola to the upside would be this crossing bullish. So that's the last thing.
I got two questions on that. I got 2 questions on that. So first off, do you need that indicator to go into negative territory or to reach oversold condition or not? Probably not, because if you look back at, say, September of 23, it crossed over even September. 23. Yep. Yeah. So, so if something like that kicked off a beautiful bull market, you're perfectly happy if we cross next month, let's say, right?
Yes, absolutely. And it's kind of like similar to the RSI supporting above 50. It can be 0 is a kind of a critical level that if it's able to support 0, it's like a really big signal of strength, and very much what I'm looking for here. Like if we look back at April of 2020, right before kind of the big move that occurred, we saw that it came up, didn't quite get overbought, but fell to right around 0, found that support that was after the COVID crash, actually, where it was able to find support right around 0 and then maintain that cross for over a year. So that's very much what I want to see. Everything is in line everything is lined up saying that we're ready for another one of these. The timing, the macro timing, the dip following the halving, the 4-hour and 1-hour MSR with the weekly and the daily. I'm very much expecting this to happen, but it hasn't happened yet. So we'll have to maybe wait another month or even 2 for that to occur. And by then price could be very much gone. Hopefully has kind of left us behind. One good month could cause that to cross, might need 2. So something to definitely keep an eye on. I know Matt talks about this and specifically on this time frame, and I think you guys have been following this indicator for a while now. So definitely kind of the last box to check. And what I'm really liking from this time frame is this pivot point that we're seeing with the low that is surrounded by 2 higher lows, with this last month even creating a higher high. So that's basically a Williams fractal. As long as this candle maintains above this low, which it has every reason to do so, that's a strong kind of foothold. If you think about a rock climber who maybe has to he reaches up to grab higher and then needs to find that foothold for before he can reach up again for another higher handhold or whatever. That's
right.
a very strong pivot.
So this brings me to my next question, right? And my next question is, what needs to happen on current candle to get the cross, or what needs to happen on next candle to get the cross? So basically, you're more familiar with this indicator, right? So is the candle going green this month enough to create a cross, or it needs to break the all-time high this month to get a cross? And what about assume the current candle closes as is? What needs to happen next candle? Like, how do we expect this indicator to behave based on potential that the current candle could go, assuming the lows are in and we are going to trend higher? So based on how quickly we go higher, what is the expectation for the indicator?
Yeah, it's a very good question. And it's one that doesn't necessarily have an exact answer that I can give. Like if we close at X price, it will definitely cross. It's more based on the current candle relative to the most recent 9 candles. And so a lot of math would need to be done for me to give exact prices. But what I can say is that it hasn't even really flinched yet. It's not even really close to crossing over. So I know that it needs a very significant move.
Sorry, I know I'm interrupting. Can you really quick use the shift key? I want to see what 9 candles back looks like.
Okay. Shift.
You know how to do that, right? No. Just hold the shift button. Just no, don't do that. Just yeah, just put your cursor on the current candle, hold the shift key, and drag back 9 candles. No, no, get rid of just the shift key, unless you're on a Mac. Yeah, there you go. Just but oh shit, doesn't work for you for some reason. Yeah. But go the other way. Go backwards. Do that, but just hold the shift key and then you like slide the thing. The way you just did it, but like. Never mind. You can do the rangefinder thing. Yeah, if it's easier. Right. So go back 9 candles.
Okay.
Okay.
Right.
That's from current candle, right? So next candle, this significantly alters the indicator because of how massive the new candle is going to be.
Yes. Absolutely right.
So how I don't know the inner workings of the indicator, right? But based on how the future ninth candle is going to be starting November 1st, how significant is this going to alter the indicator?
Yeah, massively. So it's kind of basically seeing that over the last 9 candles, price has moved uh, from 42,000 to 73, but in the last 7 or 8, it's actually moved from 73 down to where we're currently at 63. So once this candle falls off, it'll forget all about the strength of this move and the relative range that is very bearish compared to this move. So then it will be very easy for it to cross because it will look at the last 9 candles as having moved down, and if a significant move up would be just basically above the past 2 or 3 candles highs. So yeah, once this month closes and this candle falls off, it will be much easier for this to cross over, as long as it's comparing this current candle and the last 3 candles to the last 9. It's going to be really hard for this to cross into a bullish posture and would need a close above new highs.
Right,
Yeah,
but here's the thing, right? You are about to drop that $43,000 close off the count, and most indicators don't care about where the candle begins. They only care about where the candle closes. So starting on November 1st, I think the lowest price suddenly becomes $58,000.
you're absolutely right, and it will also the price action will be relative to all the price
Right.
in this range.
Right. In fact, the lowest price becomes the August low. Not even that becomes the lowest price.
Yep. So then it will be a lot easier for it to be moving up. Um, yeah. So like for this month, for it to cross, we would need to close at new highs. For next month, it'll be a lot more sensitive because this candle will no longer be a part of the equation, and it would
Right.
take a much smaller move next month.
And-
As long as we're higher than the past 2-3 months and we're just like right here next month, it'll very likely cross. For this month, we would very likely need a close at new highs.
Can you flip the MRI on this?
Let's see, I should be able to.
If it's not in your favorites, then it's invite only. Yep, that one, green. Yep, right there. And turn on the trend numbers.
Okay.
Display trend. The third square down. Yeah, that's it. Right. So next, if we go up next month, we get a green star candle. So it looks like they're going to be in line. Your indicator crossing in a green star the moment next month goes above current month's candle.
Excellent. Yeah, and I would expect these to line up very consistently since they're both largely based on 9 candle moves. So yeah, I like seeing that very much.
Yeah, and it looks like a perfect 1 to 4 candle correction off the monthly MRI top. This is lining up so nicely for the monthly trend, and it's coming off of October. So this is probably making you very bullish that the next 8 to 9 month stretch is going to be incredible.
Yeah, yeah. I really I have no reason to think otherwise. And it's really these last this last week or so has been um, very important for me, and I think that we're right on the edge of really getting back into a very strong bullish environment that would last a year plus.
All right, those are all my questions. Let me jump on screen share for a minute. People are asking for MicroStrategy. Unless you want to pull it up first, it's up to you. But I will take a look at it. And also, right after I said my October speech, I decided to go and fact check myself real quick. So I went back to the big 1929 crash just to see what happened there. And you can see the highest close we had was the week of August 26th. So, I mean, you do have to go back 100 years to find a situation where you are bullish all year long and making a top going into September, October. September was a rough month, but remember what I said. I expect the low to come in September or October and the bull market to begin. And when the low comes in September, you have to be very careful and not assume that a lower low can't come in October. This was my caution flag for Bitcoin this year. Hey, I know we got the low early September, but don't rule out a lower low in October. And back in the great 1929 crash, the market had fallen off the August closing high and the early, like September 1st or something, swing high. The market fell 17% into the September low, had a small dead cat bounce. And then the big crash comes, and the really big crash took place the third week of October with a monster low coming in literally on the last day of October. The ultimate low comes in the second week of November. So while this is not perfectly correct, when I say that bottoms are made in September, October, yes, occasionally, like in the case of the Great Depression, the bottom came in the second week of November, but you also have other metrics, right? I mean, if I was alive back then, I mean, obviously I'd be over 100 years old today, and I would have waited for the MRI buy opportunity, which came in perfectly on this candle right here with the reversal candle. And then how long did we go up? We found a bottom in mid-November of 1929. And then we had a nice year-long bull market where the stock market actually went up 50%. So once again, nice bottom, a couple of weeks later than expected, but, still according to plan. And then the following year, again, beautiful reversal off the MRI buy, monthly chart. The low comes in the second week of November again. A couple of years later in 1 year later in 1930, little dead cat bounce. The ultimate low comes in December. And once again, guess what? We found a low in October. October just gives so many buying opportunities. Yes, it didn't go to new all-time highs, the market did ultimately go lower, and yeah, and then we go from there. So yeah, I just wanted to fact check myself on that, and go into the stock market. We'll look at MSTR, and then we're gonna call it a day. Here is MicroStrategy. What do we got here? That's a beautiful consolidation. Look at this amazing breakout on a green star candle. I think MicroStrategy is predicting the future of Bitcoin. I would absolutely be bullish here. It looks perfect to me. Saw, any thoughts on this?
My only thoughts are that I have definitely changed my opinion about the stock long term, and I'm really wondering. I'm really interested to see what the story ends up being 10, 20, 30 years from now. After Saylor's interview with Saifedean, I was floored by how he's fully committed to custodying his Bitcoin with the likes of like JP Morgan to earn a little bit of yield. He thinks that that's the way to go, and we've seen this story before, and it's a very precarious situation when you're issuing a bunch of debt to buy as much Bitcoin as you possibly can, and then you're not going to be happy just holding it in cold storage. You're going to trust it with a third-party custodian to give you a little bit of yield. That is a story that just doesn't end well ever. I don't know. I think they're going too all in on Bitcoin, and then they're not even going to custody it themselves. It just makes me think of how many people have ever gotten too overexposed into something that they believe in. I don't know. I was really taken aback by how confident Saylor is in custodying his Bitcoin with a third party. When Satoshi himself says that if a third party is needed, then Bitcoin is useless. It loses all of its value the second you need a third party. And yeah, I don't know if this story is going to end well.
Right. I completely agree with that, which is why when I do interviews, especially with like mainstream media occasionally, or like alternative media, when I do an interview, I talk about Bitcoin's 3 key properties. And people tend to forget what Bitcoin's 3 key properties are. I have it on t-shirts. You probably have this t-shirt. Unconfiscatable, censorship resistant, store of value. And I separate those 3 properties. Michael Saylor, maybe in his personal life, but as a company, he has never respected the unconfiscatability property. That property only holds if you are the custodian of your own Bitcoin. Otherwise, you're not utilizing Bitcoin's most important property. Now, his company is not really transacting in Bitcoin, so he is not utilizing its censorship resistance either. So the only property that he's actually utilizing is the store of value property, which to me is its least important property, as crazy as it sounds. The fact that Bitcoin is finite is its least important property of the 3 properties. We have things that have a finite supply. Gold is one of them. It's not technically finite, but it has similar diminishing returns. What the world has never had is unconfiscatability, and censorship resistance is becoming harder and harder and harder. So Michael Saylor is only utilizing one and the least important property of Bitcoin. He might disagree, but that's my view on this. Now, the other thing is, I saw that as well, but we do have to separate, right? Is he trying to get a little bit of yield on his entire Bitcoin holdings, or is it yield on a fraction of his holdings? So, for example, yes, if Michael Saylor now decides to use his Bitcoin in custody and puts all of it to get yield on it, that could be very dangerous. But if he's responsible and he only puts 10 to 20% of his Bitcoin in cold storage for additional yield, it's not catastrophic. I mean, yes, he still has the custodian problem, but at least he's not doubling down his problem on putting his entire stash for yield. So we do have to separate the two. He wasn't very clear as to what percentage. It's kind of like what percentage of people's Bitcoin in cold storage are they using to trade with? Obviously, as responsible traders, you should only trade 10% of your stash. So if there's no reason to deviate from these rules if it comes to earning yield on your Bitcoin. If you're only trying to earn yield on 10% of the Bitcoin you have, I don't think that's a big deal.
I completely agree. Couldn't agree more. And speculating here, I think that whatever percentage he is going with, it's too much based on just one thing that he said when Saifedean really challenged him about not wanting to risk his cold storage Bitcoin and just being happy with not earning yield and having custody instead. Saylor's response was something along the lines of like, well, there's really no risk in storing it with JP Morgan or their other cronies. Like he basically, his response was that it's risk free was the tone that he had to Saifedean's reply, which made it immediately sent shivers down my spine and made me think it literally could be 100%. The way that he thought it was just free money sitting on the table that was risk free. He thought it was stupid to not be doing that. So if it's less than 50%, I'd be surprised. And the way that he's aggressively selling stock and issuing debt to buy Bitcoin, it's like he doesn't seem like the kind of guy who just does a little bit to protect himself from inflation. He's like going all in on what he believes in, and he believes in JP Morgan and the likes custodying his Bitcoin. It did not sound like it was just a 10 to 20%. That's like, okay, if it all goes to zero and they collapse and they don't custody it properly, well, it's only 10 to 20%. That was not the tone that I picked up on.
Yeah, no, that's a good point. And what people like Saylor and potentially Elon Musk, what they are underestimating is the potential for political collusion, where they are the outliers. And Elon Musk just spoke at a Trump rally. I mean, it's a very strange. I don't know. This is not the political channel. This probably needs to be saved for my personal channel, and we are going to end on this. Elon Musk is backing a horse that every other capitalist is not backing, and it's a little strange of a dynamic. But if Elon Musk backs the wrong horse, there is the potential of collusion between the government and other capitalists to divvy up a capitalist's assets. And the only two guys right now, and Elon Musk is obviously a lot wealthier than Saylor, but if the price of Bitcoin goes to $250,000, the position could potentially flip. And if the government decides that Bitcoin is a threat to American national security, it can collude with private companies to divvy up another capitalist's assets. And Saylor could be at risk of that. So this is my only advice for Saylor is to, it doesn't mean you have to self-custody, but you need to hold, some of those keys, right? I mean, I would have a massive multi-sig where some holders of the keys are not beholden to the US. So as crazy as it sounds, if I was Saylor, I would have a multi-sig with adversaries, where it's Saylor and US and let's say China, Russia, and whatever else, right? I would globally set up a multi-sig so that no country is able to capture the Bitcoin.
Yeah, I think that's a really, really great point. That once you enter the realm of custodying with a big bank, you're not only at risk of them going bankrupt and them running a Ponzi, you're also at risk of the government stepping in and confiscating everything that you have. I mean, Kanye West is an example. Says something, and now he can't access any of his funds overnight. Can't even use Apple Pay or nothing. And if you're going to really be invested in Bitcoin and you're not going to take advantage of the unconfiscatability property, you're really exposing yourself to many layers of risk that may seem nominal one day, and then and one day passes and everything changes, and now what you thought was yours is in custody of the FBI or whoever it may be. Um, and yeah, I think that anybody with that position size, I think, should absolutely be storing their private keys in separate countries potentially. I think that's what the Winklevoss twins have done is go to 10 different countries to put their private keys in. But yeah, that's getting a little bit off topic.
Right.
In
Yeah,
terms
no, look,
of
and I would think long and hard, right? I know what I just said might be crazy, but it's only crazy if you put your whole stash into a single multi-sig. That's not how it would be done. You divvy up your stash and then into, say, 10, you break up your giant stash into 10 parts, and then each part has their own multi-sigs. So if a country wants to collude against you, you expose that country for confiscating assets, okay? And countries are generally adversarial. So there's lots of things that can be done through multi-sig to take advantage of the unconfiscatability property, that if your property is confiscated, it's not your entire stash. It is a fraction of your stash while exposing those that are doing the confiscation. And people still haven't realized the danger of confiscatability and why this is the most important property of Bitcoin, but they will.
yeah,
Oh,
every day it becomes more obvious the value that Bitcoin offers the world.
yep. All right. And ooh, Nvidia charts looking great. And the overall market, I think, is also looking good. All right, we've gone for over an hour. I think it's time to call it a day. We have the Dow Jones near all-time highs. NASDAQ is a little bit lagging, and the S&P at all-time highs. Once again, I go back to one of the greatest lessons that I've learned from Martin Armstrong, and amongst others. When you see the Dow Jones leading the charge, that is international capital finding safety in the United States. I don't expect the US markets to crash, just a short-term correction off these MRI tops. And when you see the Russell 2000 leading the way and the NASDAQ leading the way, that is domestic confidence versus international confidence. We are dealing with international confidence. Wars going on all over the world. Money is flowing into the United States. Anyone calling for a great stock market crash right now are completely crazy. All right. And on this note, we're going to call it a day. Socrates, thanks for joining the Financial Summit Network. And hopefully see you again next month.
Absolutely, sounds great. Great to see you.